early 2026, we will be in the 200 to 300 range. 203,000 in the beginning of 2026 will put us in the beginning of the danger zone, where as I call it.
Do you think that there's still an opportunity in Bitcoin?
This is the diminishing return. It's going to be boring and it's going to be painful over the short term, but nevertheless fantastic over the long run. So yeah.
Wait, hold on. You buried the lead there, Sina. I want to focus on. So it's gonna be. What do you mean? So Bitcoin's just boring. Like, we're just watching gold now, is what you're saying. Yo, hello everybody. Welcome to another episode of Simply Bitcoin IRL. I'm joined here today with Sina. Sina is the co-founder of 21st Capital. I had to reach out to Sina because I've been fanboying over the content he's been dropping on X. And essentially, I'm going to completely mispronounce this, but he came up with the Quantile Model. And I said that, I said it right. Hell yeah. So he came up with the Quantile Model. And essentially, for anyone who doesn't know what that is, essentially lays out what the projection, the price projection of Bitcoin, of where it's kind of going, and it tells you if it's a little bit overheated, if it's okay, we're reaching the top territory, this is a great kind of value buy. And honestly, we've all heard that phrase, right? Like, all models are wrong, some are useful. This to me has seemed like one of the most accurate models at essentially pointing out where Bitcoin is. So, and I know a lot of math goes into it, and I want you to break it down, Sina. Like, how did you come up with this? Because essentially, and what I'll do is I'll point people to this. But you said on your X account, Bitcoin has historically grown 6x within every 40% increase in its age. It's not about the calendar year; it's about age. What do you mean by that?
Yeah. Well, thanks a lot for the kind intro. So, Bitcoin is behaving in a very, very strange way. It has done this over its age, and I have never seen anything like this in any other financial data. Just for the context, my job is basically to analyze business data, which could be from, companies or financial assets and so on. And this is really the first time we see such a methodical pattern of following behavior, and it's in Bitcoin. And what I mean by that is Bitcoin has followed this careful, this very precise pattern of growth over its age. And one of the ways you can demonstrate that is every time its age has grown by 40%, its price has become 6 times higher. So it's basically like it has the constant elasticity with time. And that time is basically, if you count it from the starting point, the Genesis block, then you get the age of Bitcoin. So as the age grows by X%, the price also grows by a fixed percentage amount. And this is not new. We have seen this behavior actually in many other systems, biological systems, social systems, solar planet systems. So in many cases, some internal dynamics of the system causes it to behave like this. And essentially what happens is you have a small system and it has a small ability to grow. But when it grows, it has a bigger ability to grow. So it's like, the bigger it gets, the more powerful it becomes. So it can keep that same level of expansion into the future. So and Bitcoin is exactly doing that. When it was a very niche asset, it was perhaps attracting a very small group of people, but over time it began attracting more and more people, and those people bring in more people. So essentially, future growth becomes a function of past growth, and you get this kind of mathematical behavior, which is again very hard to find anywhere else. Now, if you model that behavior you get that fixed elasticity and you get that power curve that nicely follows, shows Bitcoin growth over time. And to answer your question about how this model came about, basically we were being focused on this relationship that I explained. And especially again, if you look at a log chart of Bitcoin, log of time and log of price, you find a really nice direct line. So Bitcoin on that scale, on a log scale, Bitcoin becomes a line, and we were looking at this and this behavior early last year, but we had this big question of this basic analysis only gives us the average, but Bitcoin has, as everyone knows, likes to behave very crazy around that average. It wants to go much higher, wants to go much lower. So this has been on our mind for a long time. How can we address the range of Bitcoin price behavior? How can we find a model that gives us some more intelligent than guessing and some insight into the range? So this is what Quantile Model gives us. It allows us to understand what's the range of possible values for Bitcoin.
Yeah, and the thing that I think really fascinates me again is like how you've essentially been able to kind of map this out. And I'm just going to read like the so-called danger zone and the so-called frozen zone for 2020. So like 2020, the end of 2025, beginning of 2026. So on the bottom range, it's 55K. And then on the top on the top range, it's 280K. So it kind of, in a way, you can somewhat have an expectation of, where Bitcoin is going to go. And I think a lot of people essentially underestimated kind of the diminishing returns aspect of Bitcoin. And I think a lot of people underestimated that concept to me that I haven't really seen it anywhere else, which is Bitcoin essentially every 6x that it grows, it takes 40% more time, right? So right now, I think it was from 2021 to 2025, it went from 10K to 60K. So I don't know how many years, that's 4 years. So it's going to take 7 years, essentially, you're making the case for it to 6x from the 60K region.
Yeah. Yeah, this is the average. So again, this is assuming we know nothing about cycles, right? Especially for long-term investors, perhaps you're not necessarily interested in the top because you're not going to be able to catch the top. So you're just looking at the average, and the average price grows like that. But of course, all that volatility causes the price to be much higher and much lower than this analysis. But yeah, the average grows like that. And the thing is that throws a lot of people off is, yeah, that 40% increase in age in a linear year scale, it actually becomes more and more painful because it takes longer and longer for the same percentage return, and that's a diminishing return. And it's all natural because the asset class is growing. It just needs a massive more amount of capital to sustain the same amount of percentage growth. And when assets grow and mature and capture the world, just the potential to 10x and 100x just diminishes. That's supernatural, but the risk is also goes down. The volatility also goes down. So it actually becomes for less risk tolerant people. It actually becomes even a better proposition, and that's how it's going to capture millions and millions of new adopters.
Do you think that there's still an opportunity in Bitcoin? Like, we're reaching a phase where, again, if it's taking a little bit longer to, 6x and whatnot, and you kind of have a range, like, is there really an opportunity in Bitcoin anymore? Like, or the days of the 100x, I still think it has 100x in it. It's just, I think it's going to take a lot longer. But what would your response be to that? Like if someone is an investor, perhaps, I got into Bitcoin, I was 24 years old, right? It was a long time. I'm getting older. It was somewhat of a long time ago relative to where I am right now. And I thought Bitcoin was extremely expensive when I got in because I knew people that were buying it at $100. I knew people that were buying it at $50. I knew people that were buying it at $300. It's like, oh my God, I'm so late. And then looking back to that time, I'm like, God damn it. No, it was so effing cheap. So, does that still hold true today? Are we going to look back on Bitcoin 10 years from now and say, wow, I remember in 2025 when Bitcoin was at 100K?
Yeah, I think for sure. Uh, if Bitcoin follows the same pattern, the top of the range will reach $1 million somewhere in around 2030, maybe 2031, 2032, that range. So you're gonna see a 10x in could be less than 5 years, and I would say that's fantastic, better than anything you can find anywhere else, except if you go into like super risky investments. There will always be some penny stock that does a 10x in one day, but the risk doesn't justify it, right? With Bitcoin, you have this thing that has a super high chance of success. It's kind of like it's as close as possible to a guarantee, and you still get fantastic performance. Well, you're late a little bit, right? That's fine. But as we say, it's never really late in Bitcoin. Whenever you join, it's going to be still growing faster than any other asset class, any other major asset class. Again, of course, you can find that obscure altcoin here and there that might do something and then die and take all your money with it. But if you're looking for something that's real, that's long term, that has fantastic and strong fundamentals, it's flipping governments, it's flipping conservative pension funds, lots of conservative board members, corporations, and then banks, and that's just gonna explode. We are at a stage where I'm aware of many companies actively trying to begin buying Bitcoin. And the reason you're only hearing a few is that the other ones are still in process. And so, but they've started. And it's, I think we already have like 6 or 7 around the world of Bitcoin treasury companies. And a few months later, that's going to be like 20. A few months later, that's going to be 50, 100. And that's going to be a playbook that many companies are going to play with their excess cash. And it will remain for decades the top asset class. It will just grow a little bit slower, and there must be some cost to being later than others, and that's what you pay for waiting for Bitcoin to become a more de-risk the asset, right? 4 or 5 years ago, if you remember, the big question on everyone's mind was that if this thing is going to be banned by government. So we didn't even have this guarantee of the most powerful government on earth being the advocate for Bitcoin. Actually, it was like a lot of people were thinking we are going to clash with the government and they're going to kill it, right? So we were actually taking some level of risk, right? But we had the foresight, and we did the work, and we maybe also got lucky, and our analysis turned out to be correct that Bitcoin is unstoppable. So it wasn't easy, basically, to get in early. Right now, it's a no-brainer. No-brainer. You got so many people, so many people in positions of power behind it that really the case of banning or dying has completely died off. Now it's just a matter of how will it grow, and in what jurisdictions will it grow faster, which institutions will adopt it faster. So, I think it will keep being a super compelling investment, and the sooner you join, the better. However, I will also say that it's very volatile, right? The volatility might bring opportunity. If you've been in a space for some time, you would be able to just even feel, not even having a model, You can feel when people are over exuberant. You can feel when it's the best time to buy, and so on. So maybe you can adjust some of your behavior a little bit to improve, but buy and hold will still be king, and it's going to be fantastic. Again, 10x on a substantial portion of your net worth, I take it. That's amazing, and especially you don't have to do anything, right? You don't have to analyze the stock sheets and earnings reports and all that all the time. You simply buy and wait.
Yeah, I think you're 100% spot on. In terms of your perspective, and what else is going to give you these types of returns, and that's something that I want to kind of focus on and talk about, right? Which is, what are your expectations in terms of, Michael Saylor? I'm sure you're familiar with the model that he came out at the Nashville conference, where essentially he was making the case that he expects $13 million Bitcoin by the year 2045. That's his base case. His bull case was like absurd. It was like 50 million. And then his bear case was 3 million, which I think by 2045, if Bitcoin's at 3 million, it'd be a disappointment for a lot of us, to say the least. So what did you think of that model? Does that model align with the model that you have come up with?
Amazingly, his base case matches very well. After 2040 or something, when his period ends, he keeps this fixed growth rate. That's where we differ. But the stepwise growth that he has in the base case for the next however many years, that's very, very closely following the average of the Bitcoin model that we have. So
You said something really interesting there, and I want to explore that, which is, you're essentially that stable 20, I think he is at 20%, right? That stable 20% yearly return. You believe something different is going to happen in the year 2045. Do you think it's going to go down?
Maybe gradually, very slowly, like 20 might become 19, might become 18, might become 17, because, at some point, once Bitcoin captures the whole world and it becomes as big as, real estate, it just can't keep growing, because the money stock will be limited, and the world's wealth it just can't grow by 10, 20%, right? And at that point, we will just be growing by the global growth. Like if the global economy grows by 5%, Bitcoin will grow by similar amount. So, and again, as things get bigger and bigger, they're harder to move. And right now we have this arbitrage between gigantic fiat capital that's flowing it into Bitcoin, and that's enabling Bitcoin to grow fantastic and much faster than inflation and global economy's growth. But at some point, that arbitrage will end, and hopefully that's many, many decades later.
Yo, I want to tell you about the best place to build your automatic self-custody Bitcoin stack. I'm talking about bitcoinwell.com. What makes bitcoinwell.com different is that it's a completely non-custodial platform, meaning as soon as you buy Bitcoin and the funds clear, it goes straight to your self-custody Bitcoin wallet address. And that perfectly aligns with the Simply Bitcoin ethos of the separation of money and state. Support Bitcoin on-ramps that are self-custody by default. To get started, go to bitcoinwell.com today. It takes 2 to 5 minutes to sign up, and bada bing, bada boom, you're ready to buy Bitcoin.
It is so interesting. The concept of, so you think that this is going to match the market cap of real estate? What's the market cap of real estate right now? It's something absurd.
Probably 100 trillion or 100, 200 trillion. Yeah.
So that's like a 50x from now. That's like a 50. It's like a 50 to 100x. 150 to 100x. And what type of timeline are we talking about, Sina?
20, 30 years, something like that. Yeah. And basically, Bitcoin has this interesting feature where it either dies, which, like I said, that was something you could have said 10 years ago, but right now that's kind of off the table, or it grows to becoming one of the biggest asset classes in the world. The reason for that is it has the fundamental that that outperforms pretty much everything else for what it does. Like if you want to store a value, that's the best thing. If you want to move money fast, that's the best thing. I mean, the only reason like Bitcoin's medium of exchange functionality is perhaps, I mean, I don't have any data on this, but possibly getting less traction, is that we have this government mandate of, you have to use fiat currencies by fiat, so by government fiat. So other than that, like if it didn't have that government force, better technology would have captured a lot of the currencies, a lot of other asset classes, and so on, much sooner. But it will happen nevertheless, and there is basically no reason for the world to not adopt Bitcoin as their store of value, as it become when you analyze things. Are you going to put the same amount of money in? Imagine Bitcoin has grown, right, to a place where you have a lot less volatility and it has a lot. It's on the same market cap as gold, right? At that point, do you like gold better or Bitcoin better? I think the distinction will be very clear to asset allocators, and it will just keep growing and surpassing and capturing. If you want to store money, do you put it in real estate, where you have to pay taxes, you have depreciation, you have all sorts of jurisdictional issues, and you have lack of liquidity, and you can't send it over, and you can't easily sell it? Is that a better deal, or or Bitcoin? So it's just, when something is fundamentally 10x or 100x better than another old technology, it will just capture its market value. So it's very plausible to say Bitcoin will be a portion, or demonetize a significant portion of the world's assets.
Gotcha. Okay. Interesting. So much to break down, and so much to kind of unpack. Now, I have a question for you, Sina. What has Bitcoin underperformed your expectations this year or overperformed? And the reason I'm saying that is I believe I've been at Bitcoin almost a decade, right? And I've never seen as much bullish news as there is today. I've never seen it. You have the president of the United States endorsing it. They have a council at the White House, a summit at the White House. You have you have BlackRock. You have the world's largest asset manager, and essentially endorsing the asset. You have Larry Fink talking about it on legacy financial media. All of this has happened. The price really hasn't matched that type of breaking news. Like, we didn't know about the strategic Bitcoin reserve when Bitcoin made an all-time high back in Trump's inauguration day, which was 109K. That wasn't a fact. That wasn't certain. Like, now we know that the US government has the minimum intention of creating a strategic reserve. And if you take a look at one of their advisors, Bo Hines, he's literally telling you we have the intention to buy more. They have to say it in a politically correct way. So he's saying, oh, we're doing this in a budget neutral fashion, but if they had the capability, the Trump administration would be acquiring Bitcoin right now. And we know that many members of the Trump administration are Bitcoiners. They own Bitcoiners. So of course, you start talking about incentives, and no one is better than their incentives. So all these people are incentivized to just buy more Bitcoin, right? Or make sure the U.S. government buys Bitcoin, because then that makes the value of the Bitcoin that they hold higher, right? So what's your take on that? Like, and this is something I tweeted about this actually like earlier today, and the general consensus that I've gotten, and I host a show 5 days a week, and I have Bitcoiner CEOs, founders, everyday Bitcoiners, and the general message I've been getting, Sina, is like, I have no idea what's going on, right? Like the price should be way higher right now. So, but I look at your model, and like it should be, but also at the same time, it's pretty much right in the middle of your model. So what's your take on what I just said?
Yeah, so remember let me take you back to 2020, late 2020, when Elon Musk announced that Tesla is going to buy Bitcoin. You remember what happened? I think price was at 30K. And before you know it, we jumped to like 55 by one announcement, right? One tweet. I think we've gotten so used to this. And then once, for example, China tried to ban Bitcoin, we crashed very hard. Then when Tesla tried to sell, crashed very hard. And a few other times, a bullish news came out and it exploded the price. And that's kind of have set the expectations. And a lot of people are, too focused on God candles and, suddenly waking up the next day and Lambo is ready. We have to change that. And, having a model like this allows us to actually visualize the diminishing return, right? This is the diminishing return. It's going to be boring and it's going to be painful over the short term, but nevertheless fantastic over the long run. So yeah.
Wait, hold on. You buried the lead there, Sina. I want to focus on. So it's gonna be. What do you mean? So Bitcoin's just boring. Like we're just watching gold now, is what you're saying.
Well, gold on steroids, but it's just like
that doesn't sound boring.
But let me give an example. Was it like I think January when there was this wave of tweets about 1 million and 500K there. I can see 1 million. If you were following my Twitter account, we've been just constantly saying, guys, this is, too much. We're not going to repeat the same percentage growth of the last cycle. We're going to do great. Like if we still follow the same pattern that the model shows, we're going to 2x and 3x, not 10x. In 1 year, and that's already great because for such a huge asset class, I'm just not expecting as big of moves. Now, your point is correct, though. We could have been a little bit doing better because especially in the last 15 years, Bitcoin has only experienced monetary growth. But in 2020, we started this unexpected by many of cycle of tightening, especially because they messed up so badly with inflation and monetary policy, and it caused inflation. They bought up the things they shouldn't have. They bid up the prices of anything, real estate and the stuff they really should not have. So they had to kill money supply and then hurt other people. It's the absurdity is they pumped somebody's house, and then they hiked the price the rate, so other groups of people now have limited access to money. So you see the imbalance and unfairness in all of this. But that's beside the point. Bitcoin is experiencing still quite some growth in a tight monetary policy regime, right? So, we've done, what is it, in 2020, early 2024, we were at 30K, right? And we are triple that amount by now when we've had pretty, news has been good, administration has been very supportive, but money has not been expanding that much, except recently. The other thing
does Bitcoin need to? I'm learning as you speak, Sina. Does Bitcoin need money to expand for the price to go up?
Half of its power comes from there. So first off, Bitcoin, and that's an interesting rabbit hole. Bitcoin first, the way I see it, is a sponge for money supply, right? If money supply doubles, Bitcoin maybe triples, or more. And there's great work by Dr. Howell from Global Liquidity Index, and that he shows that different asset classes are responding differently to the same amount of growth in money supply. But other than that, we have this adoption. Like even if money supply stays stable, adoption is growing by time, right? It's kind of like on clockwork. Like every day you and I are waking up, we're talking about Bitcoin everywhere all the time. So that's going to help increase. So that's another lever. And the third lever is because of its essentially Bitcoin's role as a neutral asset and as some kind of insurance against any single country's risks. So it has these two kind of growth powers because of money supply and because of adoption. And then there is also this other side of the asset that provides safety in case you're worried about the risks of any jurisdiction or any particular currency. So for all these things, Bitcoin grows, and at different times, different things become more powerful and driving. But sometimes they all align and work together, and sometimes a couple of them are crippled for a while. But to give a more positive spin here, what is the Fed going to do from here on out? Do you think they can hike more or they cut more? It's only down. It's
only down, of course.
So we are kind of at the end of that tight policy.
And what's your expectation for the price action for the rest of the year? Because it has been, I don't want to repeat myself, but it's been quite tame. Do you see a potential 2-3x still in Bitcoin's future, at least in this cycle? And after that question, I want to ask you the next question, which is, are cycles still a thing?
Need liquidity without having to sell your Bitcoin? For more than 6 years now, Ledn has been the trusted choice for Bitcoin-backed lending, with transparency, security, and trust at their core. I absolutely love these guys, and I personally not only have an account with them, but also a loan. And some of the key features that I love about Ledn is the fact that there are no monthly payments. You pay at the end of the term. You also have the ability to roll over the loan as well, and you can pay it back whenever you want. Essentially what they do is that they help their clients unlock the liquidity of their BTC, allowing you to hodl while still accessing the wealth of your Bitcoin. They've been battle tested with their focus on transparency, security, and trust, allowing them to build a proven track record of client success and security, helping tens of thousands of clients harness the value of their digital assets with confidence and peace of mind. Learn more about what your BTC can do for you today. Simply Bitcoin viewers get 0.25% off their first loan by using the link in the video/podcast description. What are you waiting for? Head over to ledn.io today.
Great questions. Yeah, so if you look at the model, I don't know if you'll be able to show this later or something, but if Bitcoin grows to the same level of overheating that it did in the last cycle, we will be sometime in the end of this year or early 2026, we will be in the 200 to 300 range, right? And that will 203,000, so 203,000 in the beginning of 2026 will put us in the beginning of the danger zone, where as I call it, and that would be between 90th and 99th quantile of the distribution. So time-wise, it's kind of like the top 10% of Bitcoin's time spent in the price range. So essentially, we only expect 10% of the time spent there, and then quickly coming back down. If we do go that high, we will definitely get a major crash too, because and that will continue the cyclical behavior, because you just can't have the asset price go too much higher than the actual monetary flow supports. There are many times when X amount of dollars flow into the network, and we are lucky in Bitcoin we can actually measure that through the growth of the realized cap. There are times that realized cap grows by X amount, but price grows by much more than that, because Bitcoin is at times has a very thin market. A lot of coins are not really moving, right? So the market there aren't many coins available. So when new demand comes in, it can shoot up the price, which a lot of people call supply shock. And I see some temporary shocks happening. However, what happens is if the price goes too high, then a lot of people are like, okay, let's get that Lambo. So they take some of that cold storage money out, begin selling just at the margins. And then the price has to then be stabilized, go back to a place where the real money in the system actually supports it. And again, if you look at the data, you can see that gap. You can see that gap between the price and the real amount of money that's in the system. So because of that, if you go up, don't get too excited. And actually, if you go up to 300K by the end of by early 2026, you will be hearing a lot of people saying, the next step is 1 million, next step is 2 million, 3 million. And that's exactly when we will go back down, right? So that's going to be a lot of volatility if it happens. Now, if you ask me, I have my eyes on at least doubling from here. Anything beyond that would essentially put us in 88th, 90th quantile for me. And in my book, that's the risky zone. So, if I want to buy my Lambo, I will try to buy it when we reach there. But other than that, I would say I also going to push back a little bit against this fascination with the tops. Again, none of us are going to capture that top, right? So it's much better to have a long-term strategy. And what good is it if Bitcoin goes to 1 million tomorrow and then comes back down to 100K, right? You still, that 100K matters to you unless you have the crystal ball to sell at 1 million. Then I would say the long-term growth is a lot more interesting than the temporary tops. And if anything, to me, the bottoms are much more interesting. So,
Really? Why the bottoms are much more interesting than the tops? Why is that the case?
well, that's where opportunity arises, right? Like I said, things are getting harder. Like previously, you could just hold it and get 100x. Right now, to get really, really good performance, you have to have some visibility and some slightly smarter choices than the average.
Are
right?
you suggesting trading based on the model?
No, I mean, depends. What do you call trade? Like, for example, I'll give you an example. When
Like
we were
if it gets to the red zone, the over, like are you planning to take a percentage of your stack off and put it into cash?
I will, because at this point it's so clear to me what's happening in the market, and whenever I see people are over exuberant and promising the moon, I will take a step back. And this is something in the past cycle, probably I've all the way up to here. I've actually been always 100% of my net worth, no, not changing it at all. But if I see clearly what's going on, I will react to it, right? But at the same time, it's very important for people to realize, our ability to predict future is very limited. So you don't want to risk too much, But more interestingly, selling is very scary in Bitcoin, right? You sell it and tomorrow it goes up and you're left behind. A lot of people who sold when the price was high had to buy at a much higher price later. So that's very important to remember. But going back to the bottom, we were at 16K, and you probably remember that feeling. It wasn't probably a very nice feeling. A lot of people were thinking 20K is never going to be breached. We dropped below it. People were like, everything is broken, and so on. And I was also getting a little bit worried what's going on. But that was just what I was thinking, when my actual behavior was heavily buying, just because I was looking at the funding rate, it was deeply negative. I was looking at the sentiment. Everyone was so bearish. People were looking at, hey, I'm not going to buy at this. I'm going to wait for 8K. And if you look at the model, it also shows that anything below 20K all the way to 15K would count as the lower third of the distribution, so the frozen zone, right? So if you want to look at the model to make a decision to buy, or if you just want to look at how you feel and so on, but you have to be buying more here. So essentially, you can be the guy that always buys, but at least what I recommend is buying more when it's cheaper. So that's kind of a very conservative way of looking at looking at Bitcoin, right? Instead of like a pure buy and hold and not touching it, I would definitely be looking at buying when it's cheaper. Like I've been buying at a lot more at like 80 and 70 range in just the recent crash. Same thing in last year's 50K. You can look up my tweets at the low of last month and at the low of 2024. I have tweets saying that I'm buying heavily here. And again, just by feel, and even not looking at the model, I kind of had this idea that when we were at above 100K, I was thinking, okay, 150, 200, all those tweets about these massive gains, a little bit aggressive. So I was just not, was much more conservative when we were at those. So this is what I will do, knowing that, probably the vast majority of my stack was never going to be touched. I have coins that, have never been touched for the last, I don't know, like 7 years or so. But a portion of it, I think I'll try to use, especially as you buy more, you'd have to spend, right? When you don't have liquidity, what else are you going to do? So, and then those spending points, I will try to put them when I feel like market is kind of running ahead of itself.
Gotcha. Okay, so you're taking a more kind of active approach because the opportunity, the return profile isn't what it used to be a couple years ago. So, the 10x that we got, I mean, a little bit less than 10x, but that run from 16K to 109K, you obviously want to capture, you want to buy as much as you can near that bottom, because when you're buying at 50K, versus 16K, that's a big difference in terms of percentage return. And you're saying that's just going to get worse over time, essentially. Right? Because it was a lot easier for Bitcoin to double from 1,000 to 2,000 than it is for Bitcoin to double from 100K to 200K. I remember when we hit 100,000, right? And I was saying, guys, like at 100,000, these $1,000 price fluctuations are 1%, right? Like when we were at 1,000 or when we were at 10,000, $1,000 price fluctuation is 10%. It was a 10% move, right? Now it's a 1% move. And as we get bigger, the percentage moves are it's going to be much harder, I guess, I would say, to just double. But do you kind of see it ripping from do you like it? I guess it's hard to imagine because it's never happened before, but the top end of your model, it's like 200,000 to 300,000. I mean, do you see us just ripping straight from 95 to 300 in a short period of time?
No, it's probably going to be a bumpy, slower road. That's why I say, like, I have a range, 300K with how fast we've been growing so far seems very, very tough. But you never know. Bitcoin always surprises you, so I'm always open-minded. But the thing is, the point is, like, rather than trying to predict what will happen, I'm a lot more interested in reacting to what has happened, right? And my point here is, like, if we ever get to 300K in 6 months, okay, the model will tell you that we are very overheated and it's way faster than the fundamentals would suggest. Okay, so a few things that can happen at that point. Either you get a quick correction, or you just stop growing for a while and bleed for a while until fundamentals catch up, right? So similar thing happened, last year after ETF approval, right? We went from 30K to all-time high. Forgot what it was, like 90, 75 or something. And then that move happened, I think, in 3 weeks, right? Like massive growth. And a lot of people make this mistake. They linearly extrapolate it and say, okay, we've done this, and then we're going to do the same thing in the next month. But there is just so much money, in the world that is flowing into Bitcoin at the same time. So you just have to wait for more investors to show up. It will happen, but you just need some more patience and give it time. And of course, for the most of 2024, we were just bleeding. We were bleeding, and at 55, people were like, this is over. Bear market has started. And of course, right after that, we got another couple weeks of explosion, and then from there another bleed, right? But the thing is, you got to look at the higher lows and the higher highs, and it's on the path to grow exactly uh, as the average at least suggests. We're just getting a lot less volatility around it, right? Which is fine. Which is fine by me. I mean, again, the only thing I'm doing here, like differently than before, is I'm just planning my life in a way that I'm becoming a lot more aggressive when price is down. And I've been very public about this on Twitter. I've been just telling people, like begging everyone to just pay attention, at 78, at 75, this is the fantastic time to buy. And again, you get the most bearish commentary at the lows, get most bullish at the highs.
Yeah, it's obvious if you're looking at it.
But other than that, I'm happy. I'm happy to wait for this thesis to play out. And right now a little bit different. But for the most of my Bitcoin journey, I've had 100% of my money in it. So I'm just, cruising and waiting for everything to happen. On the side, we're spending a lot of time on other things, try to educate people and, work on our custody platform and our intelligence platform. But for investment itself, I feel like I'm in a fantastic place of, done the research, happy where I am, just wait for it to happen.
And final question to you, and what is your model kind of answers the question, but I guess I'm going to ask you anyways. What is your personal kind of expectation of Bitcoin's final performance heading into... Actually, you know what? I have two questions. So let me ask that question first. What are your expectations for the rest of the year? Price-wise.
Expectations. So I have this pinned tweet that has a bunch of foundations before I answer that. And for my expectation to happen, those things need to happen. What are they? So first of all, we have this wrench that was thrown into the analysis, which was Trump tariffs. People really weren't expecting this heavy, high numbers. And that crashed the markets and Bitcoin as well. Now, what I'm expecting for the rest of the year is tariff effect will go away. We're going to get a bunch of horrible, horrible news headlines moving forward in the next couple months saying, shelves are empty, ships are empty, everything is terrible, economy is disaster. So we have to let that happen, and that negative cycle, and it's going to be, overestimating the downside as well. So by the end of the year, that's over. And then all that negativity will also push the Fed to lower the rates. And then Trump will be done with whatever he wants to do with the deals and so on with tariffs. Then he'll be focusing, as Besant has already mentioned several times, most of his time is being focused on tax cuts and extension of TCJA and deregulation and, supporting cheap energy and all and so on, all of which are heavily pro-growth. If we do get that better, looser Fed policy and pro-growth policies of the administration, I'm expecting at least doubling of Bitcoin from here. Now, anything beyond that, like I said, it's in my danger zone, right? So I'm going to be conservative. Maybe I will buy very slowly at that point, or just not buy after we reach that place.
Gotcha. Okay, so final question for you is, are the cycles over?
Oh, great question. I don't think so, but the cycles are going to be different. The difference is, first off, the ups and downs are gonna be much more subdued. Again, just because the market's liquidity is much deeper and it's a more mature market, so you're gonna get a lot less tops, a lot lower tops, and also a lot less crashes. At this cycle, if you've seen, it's kind of like a grind up rather than explosion and then implosion. So I'm expecting more of that. Maybe this cycle we will still get big jumps and ups and downs, but beginning from the next cycle, I'm expecting these cycles to be a lot less interesting and a lot less volatile. So you get slow ups and down like other asset classes do, especially because the halving will not have a material effect. It's already very weak compared to the buys of corporations and ETFs and all that. But even next cycle, it's not going to be anything significant. So the shocks to the up and down will come from big players, right? If a new government adopts Bitcoin, or if a new government bans Bitcoin, whatever, like something crazy, then we might get some of those major moves. But I'm expecting just day-to-day, month-to-month, quarter-to-quarter volatility as opposed to 4-year to 4-year volatility.
Gotcha. Well, Sina, it was an honor to have you on the show. Like I said, huge fan of your work. Guys, go follow Sina on X. He's dropping these models. They're very, very interesting. He breaks down the logic, and big fan, been following for a while. So I figured I would invite him on the show today. Sina, why don't you tell everybody where they can find you and a little bit about 21st Capital?
Yeah, well, first, thanks a lot for inviting me. You guys are doing fantastic work. It's an honor to be on the show. At 21st Capital, we have one main mission, which is advancing self-custody. So we are offering a newer model of self-custody, which is multi-layer, multi-sig. So we allow people to get on board to multi-sig, but we allow them to have several layers of backups in case something happens. So, you might lose all the keys of the multi-sig or majority or whatever, and then you have backups that activate over time. There would be backups to those backups, so essentially making it very difficult to lose money. That's one side of our work. The other side is something that just launched last 2 months, Bitcoin Intelligence. That's a platform where people can follow models like Quantile Model. They can see the live version and a more beautiful static version. They could also read our write-ups that are about the market. We spent every week and every day understanding what the hell is going on in Bitcoin and looking at all the data and macro and on-chain and combine all that into a weekly write-up. We could access that there. All of that is accessible on 21stcapital.com.
Awesome. Well, Sina, like I said, thank you so much for joining us on the show today. Guys, like the content if you enjoy it, and I'll see you in the next one.